Hello, and welcome to Mornings with Joel, commercial real estate podcast, where we focus on rising stars and established players in commercial real estate and talk to them about how they are building legacies in today's marketplace. This is the Mornings with Joel CRE podcast. We have a very special guest and longtime acquaintance of mine, Evans Charles, who we're reminiscing here, catching up a little bit.
Mm-hmm.
And if his words slur a little bit, it's because he was at the Super Bowl last night. So be patient with him. Don't think he's drunk. He's all right.
That's right. That's right. Thank you for saying that.
Yeah, without a doubt, man. Without a doubt. So, yeah, man. So it's been exciting. I've been actually, I guess, following your career a little bit from a distance. I think the last time we really got together, you were, I think you had just acquired or were finishing up the Atlanta hotel, the one right across from the Ritz-Carlton downtown.
Wow. Okay. That was a while ago.
Yeah, that was a while ago. Yeah. And you were knocking that out. I was like, man, just doing your thing, back at that time, right in the middle of the city. And it seems like that project went well. How did that turn out?
No, that was really what really got me interested in investing in hotels. It went super well, and it wasn't how we planned it or so, but just a little bit about it. It was a multifamily building that was distressed, from the great financial crisis or so. So we bought it at probably 25 cents on the dollar from what it was paid, from what the last person paid for it.
Wow.
And then once we converted it twice, one to one brand, and then we just converted it to a Marriott without having to do much more to it. We were not on the market, and we just started having people just making us offers or so. Some of these big institutional investors. So we sold to one of the largest institutional investors, Starwood Capital, and our investors got like a 44 IRR and a 3+ multiple. So that we said to ourselves, we like this hotel space, so let's continue at it after that. So yeah, it was a good deal.
Well, with those kind of returns, you can certainly fall in love with hospitality. There ain't no doubt about it.
Right.
That's good stuff. That's good stuff. Well, I know, we had Andy Ingram on a few weeks ago, and almost every word out of his mouth was Evans Charles. So I was like, reach out to my man and give him a call.
Okay.
Yeah.
And Andy's a big promoter.
Yeah, he is, absolutely. So why hospitality? I mean, obviously that deal turned out super well. But you must have had some desire to jump into that in the first place. So, what was it about hospitality that caught your attention?
Well, it's really a story, and it was kind of like I tripped into it or so. So I started off small with small residential real estate in Philadelphia, and as I was evolving and ready to get into larger deals, the natural path is multifamily, right? So that's the way I was going, and that's what I was in the process of doing. And I was getting a haircut one day, and my barber told me about a guy from DC that owned a hotel in Miami, right? A black guy. So I didn't think any African Americans own hotels, let alone South Beach.
Yeah.
So later on, you won't believe it, later on that day, I'm getting going to my doctor's appointment, and then I pick up Black Enterprise, and this guy was on the cover of Black Enterprise, same day, like an hour later.
Wow.
And then it's saying that he just wrote some book that he just put out. So it was like this trifecta. So I went and bought the book that day when I left the doctor's office, read it from cover to cover, probably that day. He was the chairman of NABHOOD, which is, the organization Andy heads up. And they were having a meeting in about a week. So all of that happened.
You were like, I got to go.
Yeah, I just jumped on the plane. And when I saw these folks that looked like me that were on stage speaking about just, hospitality, obviously, well, not obviously, but it still is commercial real estate, just has an operating business within it. There was just a lot of motivation. I felt that I could build a lot of support because I just didn't see that anywhere else in any other asset class at that time. And then I said, all right, well, I want to do hotels. And then I just got in, immersed myself into it, and just start learning it or so.
Yeah, well, that's interesting. That's interesting because, we often talk about on this podcast about exposure and exposing the next generation to what the possibilities are. Because if you can't see it, you can't believe it, right?
Exactly.
So you actually gotta believe that and make it happen. It's funny, you were talking about that situation. I'm sure you're talking about Don Peoples.
Right, that's right.
In a hotel down there. Even, my trip when he owned the hotel down to South Beach. I was like, I gotta stay at this hotel and see how this brother's running this hotel, right?
Right.
It was one of those rare things. So they put me up and took real good care of me. If I can get my words out here.
Good deal.
Yeah. So it was really good. So you went from desiring to getting a hotel, but give me a little bit more about your background, how you got into real estate in the first place. You said you were just doing single family, like fix and flips or something like that? Or?
Yeah. It was, and I kind of tripped into that as well too. So just coming from humble beginnings, not really having the resources to pay for college. I probably got through a year and a half, but I was able to beat out the start. I walked onto the football team. And then when I got that athletic scholarship, I thought I wanted to be a psychiatrist. So I had a major in psychology. Yeah.
Wow.
Until I took chemistry, which was the hardest class ever in life. And I barely passed it. And I said, I'm not going to medical school because I can't, chemistry just threw me off. Yeah. But nevertheless, I just finished, got the degree, and then I had one more year to play ball. And I said, I'm not going to let this year go to waste. So I went to grad school. I didn't know what I wanted to do. My mentor he knew the dean of education. So he just said, get a master's in something, while they're paying for it. So then I come out with a master's in education, and I don't have it figured out yet. So then I meet my landlord, who I'm renting from, just started. I just became enamored by him. This guy owned the entire neighborhood. Everybody was coming pay him rent every month. And he just got rode around on his bike and just collect the rents. And I'm like, wow, this is kind of cool, right? And so that was my inspiration or so. And then, we talked about residual income and putting your money to work for you. I only was taught, how to get a job, how to exchange time for money. Yeah. Right. So that's all I knew. Right. I didn't understand how to put money to work and have it, produce returns for me. Right. So then I just started buying books. I just started listening to audiobooks and buying real estate books. And then I met a mentor who helped me buy my first property. And it only required $1,000 out of my pocket. I'm 25, 26 years old. It was a $32,000 foreclosure. I think the block was selling for maybe 80,000. I put 10, 15,000 into it or so from a credit card that I used at Home Depot. And I think you're from New York, but I recruited cheap labor from the neighborhood. All right. I figured out a way to get it done. I don't know if these guys had licenses or, whatever. I figured it out. I got it fixed up and got it sold. I saw a profit. And I never seen that kind of money in one check in my life. And the one thing is, I didn't do anything with that money. I'm 25, 26 years old. I think it was like $25,000. Yeah. I literally just put 100% of it into the next deal. Okay. And then I just kept doing that while I had a job. So
now let's pause here for a second, because you brought up a good point. Because, we're trying to change this mental dynamic of how, a lot of Blacks deal with money. And, you didn't run out and buy a brand new Benz.
No,
right?
No, not right.
That happens a lot, right? People go out there like, okay, well, now I got to show the neighborhood that I made it, right? Right. Please continue. You went out and you invested that money in the next deal.
Yeah, I put it in the next deal. But then also one of the early books that I read was Rich Dad, Poor Dad. And Robert Kiyosaki, the author, he talked about letting your investments pay for your luxuries, right? Like you don't use that with your, I guess to some degree it's your money, but still. So the way I perceived it is, okay, if I want to buy that Benz and that Benz is going to cost me X amount of money per month, one of my rental properties will buy that Benz for me. Yeah. It will pay for it on a monthly basis, So so when I didn't get to that point to start even buying things for myself until I had enough investments that was spitting off enough profits that can take care of that kind of stuff. So, But I already understood that my first deal was first time home buyer, 97% leverage. So I can't remember. I said I came to the table with $1,000. There's no way I can keep doing that. Yeah. Right. Yeah. Then when I come in as an investor, they're going to say, we need you to put down 20%. Where am I going to find the cash? Yeah. So when I had the 25,000, I said, okay, well, I can at least go buy $100,000 property now because I have my 25%. And then as I kept some that I just literally fixed up and rented, I just was getting lines of credits from that equity and using that as down payment. So I always thought about my next deal and how can I grow
Right.
So me going out buying luxuries would have halted my entire process,
Yeah.
and I wouldn't have been able to grow.
Yeah. Yeah. It's funny you mentioned about those books because one of the most informative ones for me was the cash flow quadrant, which
Like,
to me
no, that
was
one
his
was
best
for me
book.
too.
Yeah,
Exactly.
that was his best
Exactly.
book because if you start understanding the flow of money
Yep.
and how you don't really want to be on that employee side,
Yep.
when you're trading dollars for hours, you want to be
Hmm.
on that other side. So
Exactly.
yeah, very, very informative. So, well, that's
Yeah.
fantastic. So you got that concept early on to start using real estate to pay for other luxuries or things that you wanted to do, have that cash
Exactly.
flow kicking off. And so,
Hmm.
so now you're still in this single family space. How did things kind of progress from there?
Yeah, I got really active, and I had a formula that was just working. I started building relationships, and it's really everything you do is about relationships, right? So when I started having, I had a REO broker that was calling me first before he even put things on the market. And then I had a hard money guy that can close in 2 weeks. I mean, I was paying him crazy interest. And when I tell you this was in the early 2000s, I was paying a guy 16% interest, like
Wow.
5 points. But it didn't matter because I only held the property for 6 months. 16% for 6 months of a loan.
Yeah,
It's not that big of a deal
yeah,
because
8%.
my profit, because I was making money on the buy. So because I can close quickly, I can get it cheaper. So I can afford to pay that higher interest rate.
Yeah,
So I just got really active. I remember we were doing deals every 30, 45 days. It was just active, active, active. And it was a great, high, right? Just, it was a nice flow. And then obviously you want to grow, you want to grow, you want to get into, larger deals. And that's what happened. It was just an organic evolution to getting into more larger multifamily, 6 units, 10 units, 30 units, 100 units. And then the hotels came about or so.
yeah, yeah. No, that's
Hmm.
real interesting. You mentioned something else that was very interesting that a lot of people miss as well. They often focus on the profit on the backside, but you really make your money on the front side by
Oh
knowing
yeah,
how to buy right. You know,
exactly.
that's a
Exactly.
difference that a lot of people don't understand. So it's really understanding the math. And at the end of the day, if you take the emotion out of it, it
Hmm.
becomes a lot easier to get deals done because you understand it's all about numbers, right?
All
So if
about
the
numbers.
numbers make sense, yeah, then you do the deal. If the numbers don't make sense, you don't do the deal, right? Because that's how you
All
lock in
about
that profit
numbers.
on the front end. Yeah,
Exactly. And just to piggyback on that, and I've carried that same strategy into the real estate that we're doing today. It's always been a value add strategy. Now, there's many ways to skin the cat when it comes
right.
to investing in real estate. But it's real simple. I mean, we would literally buy a property that has something wrong with it, mismanaged, undercapitalized, something broken about it, right?
Mhm.
But it's in a location where the values of something on an after repair value is at X, and we're buying it here. So if we're buying it here and then after our repair, we still have another 20, 25% cushion to get to that value number,
Mhm.
then it can make sense to us. Same thing I do in the hotels as well too.
Yeah,
It's no different, right? So yeah, that's been the strategy.
yeah, yeah. And obviously it's working. And that's really the way you do it. You got to know those numbers on the front end and take the emotion out of it, right?
Yep,
It's all about the numbers. So
exactly.
good point, good point. So now let me ask this because the hospitality industry, as you know, it kind of got a black eye during the this COVID situation. What's your thoughts? Because I know you've shifted more toward development. We're going to talk about that in a minute, but what's your thoughts on acquiring hotels at this particular point in time, based on the COVID situation and the way things are?
Well, I got into hotels when it had a black eye back after the great financial crisis or so.
Sure.
And it was, and typically when there's a big correction in real estate, hotels typically are least in favor,
Mhm.
right? Because they have a higher risk factor. But when things are good, hotels are better than everything else, right? So again, we talked about buying things right. So at
Mhm.
that time in 2010, I'm figuring, I want to be a contrarian, right? So no one wants to touch hotels in 2010. And so, sellers are becoming way more distressed and their prices are coming down. And I'm looking at historically, I can look back at 100 years and real estate is cyclical, and I can look at specifically hotels. yes, they may go here, but they always come back, right? People are always going to travel. There's always going to be that demand. So yes, today hotels have a black eye, big time. And the unfortunate part is I own hotels that were worth this that has now, come down. Luckily, we had, the government stepped in with the CARES Act and a lot of the PPP loans, EIDL loans. That stuff kind of helped us, stay afloat. But you also, what I learned from the last downturn from the other guys that lost their assets was how they capitalized the deals. They over leveraged themselves, or they put certain kind of debt on deals that when times get hard, you get in trouble real quickly, right? So I was always conscious of that with how we capitalize our deals. So when times go down, hopefully we have enough cushion. We didn't over leverage ourselves. We have more equity in the deal, and we can stay afloat and ride the wave when we come back up. So yes, black eye today, we understand it. No one wants to touch it. And we're hungry and looking for opportunities like crazy. We're about to go into contract on a deal right now that we're probably close on another hotel value add deal that we're going to buy a full service and transition it to a dual brand select service property or so. But what happened in COVID, when you talk about just the pivot, we also said to ourselves, this is a niche and a lot of people don't understand it. When I talk to my other developer friends and they're all doing mixed use, they don't want to touch the hotel. We're getting the calls, and we like to be that partner that gets those calls because a lot of people don't understand it. But at the same time, we said to ourselves, we want to be more diverse and we want to have different asset classes in our portfolio as well, too. So it's not just everything is here at one time, So right now, everything went down during COVID, but hospitality and retail went down more than multifamily. And obviously industrial is still killing it and some other, asset classes. So if we're diverse, it just keeps us just more afloat depending on this, the cyclical nature of the market or so. So, I'll let you answer your next question. I don't want to go too far. But
No, good point. So, and that's, you brought up something that I wasn't aware of at this point. So you are carrying some hotels right now? Currently, because I was thinking that you were doing all value add and then selling them off. But,
but the problem is they're typically like a 5-year hold, and if you're on year 3, and COVID happened, you didn't sell them yet, So,
you got to ride it out.
Yeah. So I'm definitely riding it out on, but you know what? The beauty and the blessing is our lenders all work with us. And that really was a big difference maker or so. And things are, picking up. Unfortunately, we keep having these new variants come out. I'm waiting for that to just kind of stop and COVID to officially be behind us or so. That's interrupting our recovery. But we are, year over year, definitely showing growth. And, we're all thinking that bearing nothing new crazy comes out with COVID, that we can start seeing 2019 levels the end of this year, beginning of next year or so. So, and then, things will, pick back up and start moving in the right direction again.
Well, you bring up a big point, though, about the lenders being willing to work with you. And, like the work that Kirk Sykes and I was doing through the recession and all of that, helping these banks out in the conservation space. They're only willing to work with you if you put yourself in a position where you can be worked with. And that's a key lesson also that I certainly want our guests to take away from this is that, if you buy right on the front end, you protect yourself by the type of leverage and how much leverage you put on a deal. You do want to keep your down payment down, but oftentimes having some equity in the deal at the right balance makes sense in order to protect you. You get to ride that wave, coming down if it does come down. So very, very powerful point from that standpoint. So, so good job on that, continued success, and we're certainly happy about that. But then all of a sudden, we get this big revelation that there's this mega project going on in DC, and Charles is playing point guard. So what's going on, man? What's going on? Well, what's up with here in the East Hill part of DC of the district?
Right. No, you know what? Our mayor, in my opinion, has done something unprecedented, right? So equity and inclusion, since George Floyd, that's been a big buzzword.
Mm-hmm.
And there are different corporations, municipalities, private sector that are doing things to address that equity and inclusion. The way I see it is, how do we close that wealth gap, right?
Right.
So one of the things that our mayor has done is all RFPs that has a sale or a lease of DC land, that equity and inclusion component is a piece of it. But it's a little different than what it was historically, because DC has always had probably one of the most progressive Black cities in the country or so, et cetera, et cetera. So we've always had like what's called a CBE program, where these development deals would always have a CBE partner. A lot of times we were never driving a bus, right? So one of the big majority firms will be driving a bus. They get the credit because one of us is on the team as it relates to DC, et cetera, et cetera. Well, this time the RFP is saying that they want to see one of us in the lead, right? So that was a game changer.
Yeah.
So what happened was, so some of these projects may be larger than what we've done historically from an experience standpoint, but we can come together, right? So you and I may have never done, $100 million deal. Maybe you've done 40 million, I've done 40 million or so, but together we can put our resumes together and we can take advantage of something like that. So that's what it's created, because I was actually reaching out to some of the majority firms, and for the first time they were saying, I'm sitting on the sideline. Like, I'm not going to go spend $100,000 chasing an RFP where the writing's on the wall, as relates to who the target, lead investor is. So now you have a situation where you have African-American firms competing against each other, which is cool, but we make up such a small percentage of it. And it's even better if we just come together and maybe we're the only respondent, but all of us are in a deal together. You know what I mean? So some of that is actually happening right now. So I said to myself, this is a once in a lifetime opportunity, right? I don't know. The time is now to pivot. So we went after our first deal, and it was a historic school that was around during segregation. It was a Blacks only school way back in the day or so, that we were going to, 2 buildings we were going to convert to all probably like 95 affordable apartments or so, right? So we submitted a bid. I got a lot of education just going through that process. I thought we were, we had a decent proposal, but we did not win. And I'm glad we didn't win in hindsight, because had we won that one, we might not have, they wouldn't have probably given us 2 back-to-back deals. And that one was a $50 million deal. The next one was a $600 million deal, right? So there was like 5, 6 deals out on the streets. And I'm saying, well, wow. So then I wasn't even thinking about this one at first. I was thinking about a different one. But then, you may not know DC, but we grew up here, and there were areas where we spent time and we never knew it was waterfront, because it was probably industrial. It had buildings, and we didn't have Google Earth at the time. We don't see DC from an aerial, right? So like even where our Nat Stadium is now, I never knew that there was waterfront behind all that. So this area was the same way. Like DC jail is over here. Old DC General Hospital was here. The old RFK Stadium where the Skins played is here. You just didn't know. When somebody said to me, oh, this is waterfront and this could be prime for hospitality as well too, I said, wow. Looked at it on an aerial. And then I started just putting together a team. And you know what? The thing where I really tapped into is the organization where you and I met, was Reese. In my humble opinion, I think that Reese is a combination of the most talented Black folks, I think, in the world in commercial real estate, right? So what better place to think about and tap into if you're trying to put together a team of talented folks? Now, local is important for our city. We're not all that welcoming of just everyone else coming in here and just taking advantage of our economics. We want our local folks to win, and our government feels that way. Yeah. But I said to myself, but you know what? If I can bring more muscle, and it's out of town, but it's Black muscle as opposed to local, non-Black muscle, to do something of this nature, I thought that may be a better sale. So I brought on, I don't know if you remember Merritt Marshall from
Yeah, I know.
yeah,
Yeah.
from BRP. So I gave Merritt the call. And the good thing is his partner is also a Washingtonian. He was born and raised in DC. So that helped the story.
Yeah.
So when he came down, he read the RFP. I told him what the plans, that I was thinking. He said, look, let's do it. Right. So when he joined, they have, a track record, 14-year track record with Goldman Sachs. They've done a couple $1 billion of development with a couple billion in the pipeline. They're one of the largest affordable developers in the country. So that checked that box off real strong from a standpoint of affordable housing, which is what our mayor is really about. We're trying to really push affordable.
Mm-hmm.
And then I just went from there. I built out a local team. Look, you understand that there's experience, there's ability to capitalize, there's politics. There's a lot of things that go into these RFPs. And I had to think through, how do we check off all the boxes, and how do we assemble a team that brings value that checks off all those boxes? Mm-hmm. So I just went on a mission, and I just started assembling the team one by one by one. So another key person we got on the team was the former councilwoman for Ward 7, which is where this property is. And she was the councilwoman for 10 years there. So a big component is getting community support.
Yeah.
Right.
Exactly. Yeah. So you got to check that box, right?
You got to check that box, right? Yeah. So it was just strategic moves like that. But the thing was we're new to the city as it relates to getting one of these deals. So that was also a risk factor, because I live here, but being in hospitality, I'm doing deals everywhere else, but in DC proper or so. So we had to overcome that, and with God's blessings or so, we were awarded the deal. So it's a life-changing opportunity. It's $600 million deal, 1.2 million square feet of waterfront development. I personally don't know of any all-minority team that has developed something of this magnitude in a major gateway city like DC. I think it's something that our great-great-grandchildren will be proud to know, who was behind this. And I don't know the last time you've been to DC and you see our waterfront development, from the wharf, which is a $2 billion project, to the Navy Yard. And if you were on a boat and you were traveling, along the Potomac River into the Anacostia River, you would then get to this site in like 10 minutes. And this is going to have docks. A boardwalk is going to be phenomenal in the future as well, too. So very, 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 very excited about it.
Yeah. No, it's exciting. And I get to DC pretty often. So, it's an easy trip from Atlanta where I'm at. So, to run up, have some meetings, run back, it's real easy. So, but no, that's phenomenal. And by the way, when you talk to Meredith, my team has been trying to catch up with him. So tell him to return some phone calls. So,
Okay. Will do.
Let them know. They've been trying to catch it. So, but no, that's fantastic. I mean, that's really what it's all about, and I remember having a conversation with Charles Frazier a while ago, and I was talking about how, it's really the opportunity to change the guard. If you remember the way Reese initially started, it was like 3 figureheads. Right? I'm going to call no names, but you know what I'm talking about.
Yeah.
And then over time, it's like, okay, how do we change the guard? How does that next group step up so that we stay viable and doesn't die off? But it's been growing, which obviously has been great, because of that. So it's a really, really exciting project that you're doing. The DC waterfront, we actually looked at a deal over on M Street, near the waterfront, and there was a lot of issues involved in that. But it's like you said, it gets political because there's only one waterfront, right? And if you do it right, you can really do well. If you do it wrong, you could be a disaster. So, and everybody's looking at you, so you got to be careful. But
And I didn't tell you the program, though. Let me share the program.
Yeah, please.
Yeah, so basically, like I said, there's a strong push for affordable housing. So we're delivering 1,100 units. 1/3 is going to be deeply affordable. 1/3 is more of the workforce housing type of population or income population, and the other third is market rate. We're doing a Marriott hotel, 150 key extended stay with a beautiful rooftop with unobstructed views to the Capitol from where it's going to, from an elevation standpoint, because we're trying to create we want to create a mixed income community and mixed age. We're also doing, we have a co-living component. We have about 120 beds. We've partnered with a group called Common out of New York. to implement this co-living strategy where folks, a lot of times younger professionals who can't afford, just the market rate rents to live in the core of urban areas or so, they're fine with the roommate concept, right? And we create these larger 3-bedroom units that are designed for roommates or so to give them an opportunity to be able to have access to leasing in such a community where we're doing about 65,000 square feet of retail. We have like a 35,000 mid-box grocer that we're targeting, not committed, but we're in conversations with several folks. We're talking to people like Target or so, just as an example.
Yeah.
We understand that wealth creation in our country most of the time comes from people owning their home, right? So what can we do in a community? And Ward 7 is east of the river, even though this is like on the river and it's on the west side of the river, but the map shows that it's still part of Ward 7. And Ward 7 and 8, is typically where you've had some of the lower socioeconomic residents of the city, right? So our thinking has been, how do we drive as much benefit as possible to that community? So we're also building townhomes. So we're building townhomes. Some will be affordable. We're partnering with some local nonprofits to help some of the residents with financial literacy, how to not only just qualify and get a mortgage by improving your credit, but how do we keep you, in these homes? Because a lot of times we get in these homes and we lose these homes, right? Mm-hmm. So we have townhomes. We have 2 over 2 townhomes to even bring the price point down. So it's basically taking one townhome and cutting it up into 2, right? And then we're going to have condos. So totally, we have about 126 home ownership opportunities that we've created. Mm-hmm. The city wanted us to build a park. So we're building a park with an amphitheater, with some water features. There was a young girl abducted from DC General Hospital named Alicia Rudd some years ago. So we touched base with the family. So we're naming the playground in honor of, Alicia over there. Did I cover everything? Yeah, I think I did. Okay. So, yeah.
Interesting. How are you going to pay for the green space? Because that's always an anchor on the deal, because there's not a consistent cash flow. Or is there enough profit in the deal where it doesn't really matter?
No, you bring up a good point, and people see these big numbers and they think everybody just gets rich, but they don't realize that, developer has to pay for things like that, have to pay for infrastructure. I mean, there's a lot of things that kind of really, you have to massage the economics in order to make work. But we have some very smart people. So we had to figure out, how to structure the deal from the cost of the ground lease to any subsidies. I mean, you know how it works. So we, I can't get into all the specifics or so, but we figured out a way to make it work. And then we're hopeful with the new infrastructure bill that was passed, right? I mean, this deal it should be a prime target for that money, right? It's affordable, it's urban, it's the nation's capital, and it needs a significant amount of infrastructure. So we will be trying to tap into those federal dollars to also help subsidize the project and help it and help the economics make more sense.
Yeah, that might be a good way to go. You were well back to my mind. We were having a lot of meetings at one point with Victor Hoskins up there about conservation and doing things like that. And it even got to the point of all the city's attorneys meeting with all of our attorneys. We all flew up from Atlanta. It was challenging because DC is just a very unique place, and in the transitions of the political environment there take place, and it's just very interesting. But keep that in the back of your mind. A conservation strategy might actually work to help offset the cost of that land that's associated with it. So just something to think about. Yeah, going.
Okay. All right. Appreciate you sharing that.
Yeah. Absolutely. So, but let me do this. This was really exciting and informative, and I don't want to keep you all to myself. So we tend to use the last 20 minutes for a little bit of Q&A. So we'll open it up. And if you guys have any questions, go ahead and put those in the chat. Or if you can raise your virtual hand, we will call on you and see if we can get those questions in. Let's see here. So, and Jerry, okay, you're just saying, yeah, we're all a little groggy from the game. Yeah, we are a little groggy from the game. So, I'm tired too. but it's all good. It's all good. So we'll get through it. Yeah. So while we're waiting on those hands to come in, what's the total capitalization of this deal in DC? What do you think it's going to top out at once it's all said?
Oh no, it's I think exactly it's probably like $564 million or so is what the deal is going to take. And also keep in mind that this is by far will be collectively the largest project in DC history, because this is a total of 67-acre site.
Wow.
So the one that we just, yeah. So what we just, and then the RFK site, which is still owned by the federal government, is like 150 acres. So our mayor just announced once the Washington football team changed their name officially, that, she wants the team to come back to the city. And she wants the team to come to this particular site because it's already prime. It's an events and entertainment district. It's already has a stadium there that's going to be imploded, pretty soon. So when it comes to development, this is where it's at. And then adjacent to it, I'm sure you've heard, it's Capitol Hill. And then you have the Anacostia River, right? So it makes perfect sense. So our parcel is about 6.8 acres. And then another parcel that just was awarded next to us is probably like 5 acres. And there's going to be more RFPs that's just going to keep coming until all of this gets developed. And then the RFK site until all that gets developed. So it's going to be really, 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 really big.
Yeah, the stuff going on up in DC is really, really exciting. So we look forward to how it continues to go and go from there. And we got Herman Bowles coming on in a few weeks, so I'm sure Herman's
awesome
too. Yeah.
Oh yeah.
He's the man up there right now, so
Yeah, he's the real deal.
Yeah, so. Absolutely. So, all right. So, and Jerry, I know you're not shy when it comes to speaking up. So, why don't you ask your question if you don't mind? If you can come on camera. No, you don't have to come on camera, but just if you want to ask your question directly, that would be cool.
Thank you for being on. I just, sitting here and listening to your story and, how you built your career. One of the 6 questions that came up was, what was one of the most pivotal moves or pivotal, when I say moves, like were there team members, investors, education, like what were some of the most critical moves that you made that really made a difference for you?
That's a good question. It's been a lot of them or so. I think even on that Atlanta deal, being faced with adversity of almost losing everything, which I've been there before. I don't, and I've changed my strategy significantly. But just speaking about when I first got into hotels, one of the things that I did that I would not do or recommend doing again was whatever available cash that I accumulated, I put it all into a deal because, the equity was obviously, the equity requirement was a lot higher. But what I would do in hindsight is syndicate that equity, meaning that I would go to different people and spread the risk and share the upside with them, as opposed to me seeing all the upside to myself and putting all of my money in one deal. So being caught in adversity, even with that Atlanta deal, with the first strategy we had, put us in a position where we almost lost it all. And if it wasn't for coming up with the idea to go to Marriott and getting Marriott to agree for us to get their flag over the one that we had, I mean, the NOI probably increased 300% just by the Marriott flag versus this other flag. And we did nothing different to the product or so. Experiencing extreme adversity and never, ever, ever losing sight of trying to, always thinking that we're going to figure out a way out of this, always being an optimistic thinker and trying to talk that into reality by our actions as well, too, has been, just some things that has really worked for us. And COVID is another example. When COVID hit, I mean, a lot of people were thinking, is this it? Are we going to just lose our shirts? So, because one of the things with African-American investors, and you can look at this, I just came from the Super Bowl. When you see, some African-Americans who get a head coaching job, if they don't do well, they don't get a second chance. With us, if we mess up a deal and we mess up money, investors are not going to give us a second chance. Now, that's not the same for non-Black folks or so. So we're very, 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 very key on, we just can't afford to make a mistake. And we can make mistakes, but we can't afford to make a cataclysmic mistake where we for me, where we have to give the keys back. Now, people tell me all the time, even other Black, it comes with the territory. I don't know what that feels like. I don't ever want to know what it feels like. But older guys still tell me, Evans, do not think that that's the end of the world, that can happen in our business or so. So that was a long-winded way of me just giving you an example of me having a very pivotal moment in my career.
But I appreciate you sharing that. That's a big point, and it's really the reason why, Evans, that so many minorities, even in the fund space, outperform their larger mainstream competitors because they're much more careful with that capital. You know, they know that they're not going to have another billion raised next month like BlackRock does, or
Exactly.
So yeah, that's very important. I want to mention something also, and Jerry, just because I've known Evans for a long time, that if you notice what he was saying, he was willing to get out there and try and ask for it. He went for it. When he heard about Don Peebles and all this situation there, he didn't say, "Oh, okay, that's cool," and just sit at home, right? You got on a plane and went to the event to learn more, and you got engrossed in it. So, putting forth that effort is a large part of the success as well in making it happen. So.
But in addition to that, at some point you got to believe in yourself, and you got to take some risk.
Big time.
You got to take some risk. You got to jump out there.
Yeah. If you don't believe in yourself, no one else will, right?
Yep.
That's part of the story. All right. John, you had a question here. When you speak to, or will you speak to investing in hotels in this area of B&Bs? So what do you think about that, Evans? How do you fare with the onslaught of the Airbnbs out there of the world?
Yeah, well, I mean, Airbnb have had significant growth or so. And I think generic perception is that it's going to really it's been taken away from hospitality, and it's going to be a big disruptor in hospitality, right? But I heard someone say this, and it made all the sense to me. There's a big difference from what Airbnb does and what we do. So Airbnb is in the lodging business. We're in the hospitality business, and there's a difference, right? So if you're just looking for lodging and just space, obviously Airbnb is doing a great job doing that. But what Airbnb has also done, it's expanded the playing field. It's not necessarily just extracting from the travelers who would have traditionally just stayed in hotels, but particularly a lot of younger folks or so. And maybe there's some of the new folks who could have been in hotels, but it's coexisting very well. And it's not really as big of a detractor from the hotel space as people think that it is or so. I stayed in an Airbnb in LA. We rented a house. So I don't have an issue with it. We like to be where business travelers need to be, right? And our strategy. And if we're in markets where there's corporate and business travelers, I don't think their corporations are going to just allow them to just go around staying in Airbnbs all over the place. I don't know if it can change, but people also need services that we provide that you're not going to get with Airbnb. People come in town because they have meetings, and sometimes they have banquets and catering needs or so that we can provide at a hotel, and also being centrally located to where they need to do business. And not that Airbnb can't have that as well. But again, not as much of a detractor as you think it is. And I think the two can coexist.
All right. Good point. Appreciate that. John, hopefully that answered your question. If not, let us know. But I think that was well.
Yep, that did.
Okay. All right. Thank you, John. Appreciate that. Casey, what would you contribute to the success of winning the bid? City council members' participation. So what would you say about that? The bid obviously for the East Hill project.
Well, it hasn't gone to city council yet for a vote, but I think we put together a compelling story. I think we had a program that met the needs of the RFP. I think we put together a team that not only, we were an all African-American team. We were 51% locally owned. I made sure we structured it that way. We were 51% CBE designation. And then when we had to go to the community to weigh in on the different projects, the ward in which this was located in, out of the 6 commissioners, we got 5 out of 6 to vote for us. So that was also very, very, very impactful that we got their support. We did get the local council member for Ward 7 support as well, too. So that was another factor. So program, team, community support. I think those are the key factors.
Okay, sounds good. KC, does that satisfy your question?
Yes, it does. I just wanted to pay homage to Mr. Charles, being a
Christy.
student. Yes, Casey, my professional name. Being at Howard, like you said, I never knew that the waterfront was just there. And I just want to pay homage to you since this is Black History Month. You're definitely making history, and I'm proud of you. So I just had to stop what I was doing and just, pay homage.
Oh, thank you so much for those kind words. I really appreciate that.
Oh, yes, definitely. And plus, I love your co-living strategy. I like that. Great.
Well, we appreciate your service as you're touching the future by being an educator. Like I said, I have an educational background. So thank you for what you're doing and the impact you're having.
Oh, no. I went to school at Howard in engineering. I'm not.
I thought you. Okay. Sorry about
Definitely
that.
not a teacher.
Okay.
I couldn't make it. But thank you so much. Have an awesome day.
Okay.
All right, Christy. Thanks. Appreciate that. All right. Sounds good. Uriah, you want to ask your question here about syndication?
Absolutely. Good morning, everyone.
Yeah, good to have you.
Absolutely. So I wanted to ask, what are some of the key fundamentals that you should consider when syndicating a deal from your experience?
Well, because it's quote unquote family and friends or associates or colleagues or so, that's super important to me. So what I need to consider is that the deal really works. That's the first thing, because I don't want to go to Joel and say, hey, I want you to invest in something because I treat his money or anyone else's money almost more importantly than my own money. Like I would rather take a hit before you take a hit personally, because people talk. And if I have this reputation of not being a steward of people's money, then it's going to be hard for me to raise money the next time. So again, I don't think the short game. I always think the long game. I'm always thinking about the future and the reputation and not just one deal. One deal, I can't retire off one deal. So the most important thing to me is, does the deal really pencil? Does it have a lot of juice in it and a lot of room to make mistakes for people to still make money? And then in addition to that, another key thing is, I put together a really, really good package to, in a succinct way, not something super long and drawn out, but people can get it, because most folks do not understand the hotel investment world. And I may be speaking to people who are professionals who are in other worlds. So I have to make it simple enough for them to just get it and get comfortable, because confused people don't do anything. If they don't understand it, they're not going to invest with you. So that's another key component. And it's just relationships, just constantly just conducting yourself in a certain way where people trust you, people feel good about working with you. So, and when people want to ride the wave, if they see that you're winning and they see that you're successful and you're creating returns for your investors, they want to be a part of that. So.
And are there any specific minimum rates of returns that you're looking at presenting to?
Absolutely. Yes,
okay.
yes. So, hotels, could be a little bit higher risk factor. So we seek higher returns. So if it was multifamily, people may look for a low teens return. In hospitality, we're trying to get high teen, over a 20 as far as an IRR. We look to get, a double digit cash on cash return. Double digit is anything north of 10% on an annual basis. We want to be able to clip that on a quarterly basis to our investors or so. And we want to achieve north of a 2x multiple. So, doubling your money over a 5-year period.
Got it. Awesome. Thank you.
You're welcome.
All right. Sounds good. Yeah, Uriah's a CCM student right now, so he's got all these deep questions coming at me all the time with.
Okay.
That's good. That's good. Uriah, thank you so much for your input there. E. Jordan, it looks like you just had a statement. Were you going to say anything else about concierge versus not having that with Airbnb, or was that just a statement? I think that was just a statement there. All right. We'll move on. Monica, what are key factors in creating your story and winning the bid? And you spoke to that a good bit earlier, but Monica, I think you got in a little bit late. You want to summarize that real quick? What are some of those key factors?
It's really reading the RFP thoroughly and making sure that you're hitting all the check boxes in the RFP, and you really understand what's really important to the administration, and you look to really just maximize those particular areas. So equity and inclusion was important. Obviously, affordable housing is important. So what the community wants is important. So just making sure we really check those boxes off, and just capturing all the needs of the RFP to a point where we're fortunate to be awarded the deal. So,
all right, sounds good. Monica, is that good? Hopefully so.
Yes, that's great. Thank you so much.
Fantastic.
you're welcome.
Matt, what are the key components that make a deal look attractive to you? That's a very broad question because it depends on asset classes and everything else. But unless, Matt, you want to elaborate on that, or want to just go with that?
I think I can answer that.
Okay, all right.
I mean, for me, what key components of making a deal look attractive is there an opportunity to add value to a deal? I mean, that's really what I love. You know, like I said, we like to buy things that are broken, undercapitalized, you know, under mismanaged, something broken about the deal, and can we bring a solution to it and just create value? That's just the bottom line. Mm-hmm. And then when it starts from a number standpoint, it's our basis. You know, what do we, like I said, we make our money on the buy. What are we buying it at? You know, is our basis low enough that gives us a lot of cushion and room for even some of the volatility, you know, that could happen from a market perspective? And the good thing about hotels is we can look at how a sub-market has performed over the last 10 years. You know, we can pull what's called a star report, and we can look at a specific competitive set of properties, 5 or 6 properties, and we can see the average rate, the average occupancy for every single month over the last 10 years. So we think the best indication of what's going to happen tomorrow is what has happened yesterday, right? So we analyze that data, and we make educated assumptions on what we think is going to happen tomorrow. And again, for us, it's all about the basis. Because even if we're off, and even if the market shows something different, we bought it low enough where we can weather that storm. So it's a basis play, and an opportunity for us to create value. That's our strategy.
Yeah. And you can't really emphasize that enough because, you know, again, that's how you weather the storm. You couldn't look back in history and predict COVID.
No.
Nobody would have known, right? But
exactly.
If the basis was off, if the basis was too high, then you're in trouble, right?
That's right.
It always comes back to basis on every deal. It always comes back to basis. So appreciate you bringing that up. And by the way, I know most of you folks are here in Atlanta. Just to give you a visual, if you know where the Ritz-Carlton is downtown, if you look diagonally across the street from there, that's the hotel that Evans owned at that point in time. So just a little landmark for you, right next to 200 Peachtree Street going downtown before you get to the Equitable Building. So for you Atlanta heads. All right. Appreciate that. And then hopefully, Matt, that answers your question. But Pam, you had a question. What is the minimum investment of one of your projects? So what would you say, Evans?
That have changed as the projects grow larger in size. So today,
not $1,000 anymore.
No, it's not 1,000 anymore. It was at one point, but it has definitely evolved since then. I would say that we're probably looking at deals, you know, at least a $10 million. But I'm not answering your question, so I don't want to scare you. At least a $10 million equity check, which would equate to a $30+ million deal, right? So that's kind of like on the smaller side, but that's kind of like what's been like a sweet spot of deals that we've been looking at in hospitality. And when it comes to that, I would say that today, you know, it's probably more close to $100,000 minimum to be on what's called the GP or general partner side of the capital stack. There's a limited partner who's predominantly most of the equity. Then there's a general partner who's a portion of the equity. And that's typically what we're syndicating today. And that 100,000, I tell people who may not have 100 themselves that if I don't want to deal with a bunch of people, but if you had a couple people that you brought to the table and you formed an LLC that you're the managing member of, and I never have to deal with, because I don't want to deal with a lot of people. And you had two people that made up your 100, you put up 50, somebody else put up 50, or you put up 25 and two, whatever you did. I've provided access to entry into some of our deals by structuring it that way for people who may not have that $100,000 minimum investment.
Okay. All right. Sounds good. Okay. So that answers the question. So yeah, very good point. And I just want to emphasize one thing as we kind of wrap up here. Evans is not being arrogant by saying he doesn't want to deal with a whole bunch of people. Well, why don't you answer it? Because you're the guest. Why wouldn't you want to deal with a whole bunch of people? And why is that not being arrogant?
Well, if I'm doing a $30 million deal and I have 150 people that put up $10,000, I'm just throwing out a number, that's calling me about their investments on, I wouldn't be able to grow. You know what I mean? If I had to I can't do that. That's just not, that's nothing to do with arrogance. It's just time and how I'm going to manage my time going forward. So, you know, but the purpose of me doing it is because I don't want to leave that person out, because I can only deal with the person. Let's just say I only want to deal with a guy who can write $1 million check, right? There's very few of those, you know, a lot fewer of people like that. But other folks that just want to get in and invest and be a part of this, I want to try to just give access to it. But in exchange, I can't deal with 150 people for one deal.
Yeah, exactly. So that's why I wanted you to bring that out, because it's certainly, it's understanding the manpower that goes into getting these deals done. And if you're taking phone calls every 5 minutes, you know,
right.
How am I going to get my $10,000 back?
Right.
Can't deal with this, right?
Right.
Oh man, yeah, you get a short fuse on that real quick. So yeah, I get it. So, all right. Well, hey, I certainly appreciate it, man. This has been a great call.
Awesome.
In conclusion, I'm gonna give you the last word. What would you say to people that would love to follow in your footsteps? Because that's what this is all about. It's giving exposure, introducing people to our audience to folks that have made significant progress in the commercial real estate space. You're one of those people that I view as one of those success stories. So what would you say to the ones coming up behind you to encourage them to keep going or to get involved?
Yeah, whatever it is, if you're, it's to me, I think that the difference maker was just passion and ambition, right? And I really emphasize that, because you could look at other folks who are investing or developing projects at a certain level and you see talent, right? For me, and I don't know, I don't know if I necessarily had more talent than someone else, but I was willing to work harder than someone else. I know that much, right? So even if you ran faster than me, you were smarter than me, I was willing to put in those extra hours to keep reading and to keep going and figure it out. And I just think that whenever I meet people, and I meet a lot of folks who are interested in investing, but I'm really attracted to helping people that I could see have a burning desire, and you can't teach that.
Yeah.
So, you want to be passionate about whatever you choose to do. And if this is something you want to get into, if your heart is in it and you're passionate and you're willing to put in the time to learn, to be a mentee, to build relationships, people who we're all really busy, but for the most part, we would invest time in people who we see have a strong passion and a hunger, because if you have that, I know you're going to be successful. It's just going to be a matter of time or so. So I just want to emphasize ambition and passion and loving something that I won't say I'll do it for free, but I love doing it, right? I love what I do. And it's not just, money. I mean, the money, like I shared earlier, when I made my first profit, I just put it into another deal. Like, I'm way more enamored about the process, about bringing an idea to something and creating something that out of nothing, or taking something that was dilapidated and creating something that I can look back on. Even when I go to Atlanta now, like, it just feels good that was a dilapidated multifamily building, and now it's a Marriott, and that came from my brain, So so I don't know. I enjoy that stuff, So just be hungry and be ambitious and be passionate.
Yeah, that's a good way to conclude, man, because that's what it's all about. Like you said, you can't teach hunger, right? If a person, they gotta want it. Because if they don't want it, you don't want to invest the time in them, right? Because you want to see their success. And I think we can both agree there will be bad days. And if you don't have a passion for it, you won't get out of bed, right?
Yep.
It's that passion to get you out of bed. So, certainly appreciate it. So, Evans, it's been fantastic.
Been a pleasure.
Can't let so many years go by without catching up with each other again. So,
Exactly.
I'll take the blame for that, but I'll do better in the future. Maybe next time we'll meet up at the Super Bowl. That'll be kind of cool.
There we go.
Yeah, so that'll all work out. But this has been fantastic, and obviously much more success to you and all that you're doing.
Thank you so much. Fantastic. I appreciate it.
Yeah, and we're real happy for you. So again, for everyone listening, this is the Mornings with Joel CRE podcast. We want to thank our special guest Evan Shaw for being here today, and thank you so much for being part of our audience today. Thank you so much, and Evan.
All right. Thank you, everybody, for listening. Have a great day.
Okay, bro. Take care. Everybody.
All right. Take care.
You've been listening to Mornings with Joel, commercial real estate podcast, where we focus on rising stars and established players in commercial real estate and talk to them about how they are building legacies in today's marketplace. Please check back weekly to hear our upcoming guests.